Hello. My name is Troy White. I'm with Hoodoo Financial. Today in this video, we're going to talk about black wealth and how to create more of it with alternative investments and financial planning. So first off, let's cover the racial wealth gap. The racial wealth gap has been a persistent issue in the United States, with black families holding significantly less wealth than white families in America. However, by exploring alternative investing strategies and encouraging a thoughtful financial planning process, we can work to close the gap and build more improved African American community. And so we need to understand a little more about the racial wealth gap. This gap is the result of systemic racism and discrimination, period. But it's made more difficult for black families to build and accumulate wealth over time because of these barriers. So, for example, discriminatory lending practices like redlining, lack of access to quality education and job opportunities, these things have contributed to this gap. And by understanding the challenges, we can begin to develop strategies to overcome the problem, right? If we don't know better, we can't do better. So that's what we're here talking about. So when I say alternative investing, we need to identify that and talk about these strategies. So alternative investments really means investments that are not stocks and bonds. Primarily, that's what it means. So one strategy of building black wealth is to explore alternative investments beyond just stocks and bonds, right? So alternative investments can provide higher returns and greater diversification. So I'm not telling you that you should not be in stocks and bonds. I'm telling you that that's just a slice of what is required for us to build generational wealth. And so some examples of alternative investments include real estate, private equity investments, peer-to-peer lending, real estate syndications, and there are others. Cryptocurrencies is another alternative investment. And so my general argument is that you need to be in all of these. We need to build diversified portfolios so that we spread the risk. And in today's economy, it's not just all about stocks and bonds. We need, it's about you and what's going to benefit your family best, and what's going to help build your portfolio best, and how you're going to access them, right? And so alternative investments is a way for us to achieve that diversification and access alternatives, right? So first one I want to talk about is marketplace lending. It's also referred to as peer-to-peer. Peer-to-peer lending is a type of lending that connects borrowers directly with investors. It bypasses the traditional financial institutions like banks. So in peer-to-peer lending, individuals or businesses who are looking for loans can borrow money, and they are borrowing it from a pool of investors. This pool of investors provides the funds in exchange for interest payments and a return on their investment. So essentially, you are being the bank, and because of apps, or I shouldn't call them apps, just technology that allows financial, really it's called fintech firms. It's the new technological financial institutions that through crowdsourcing allows us, a lot of people, to put into a pool, and that pool are loans, or that pool of resources is lended out, and it'll, on the other side, on the consumer side, it allows, again, those who traditionally didn't have access to banks. Banks turn them down. Well, they have access to a loan, in using peer-to-peer. So peer-to-peer lending platforms act as the intermediaries, basically, between the borrowers and the investors. And so they both sides benefit. So they use the technology to match borrowers with investors who are willing to fund the loans. And the platform handles the loan origination process, including the credit checks, the underwriting, the servicing of the loans, and the peer-to-peer lending can offer borrowers lower interest rates compared to what banks are offering, and at the same time provide investors with higher returns than traditional bond investing can do. And terms are often better than what a bond is going to give you. So how do you participate in marketplace lending? Well, first, you got to research the platforms. Look for platforms that have a strong track record of returns. And you want low default rates and a diverse pool of borrowers. You also want to diversify your investments within the peer-to-peer lending marketplace lending sector. And because it's important to diversify your investments across different platforms of loans, so you don't want to just use one. Is my point there. And you got to understand the risk. So while marketplace lending can provide higher returns than the traditional investments, it comes with higher risk, and there's a risk reward trade-off all the time. So choose your loan terms carefully. Most marketplace lending platforms offer loans that vary in terms and interest rates. So you got to consider your investment goals and your risk tolerance when choosing the loan terms that are right for you. Remember, it's always a risk reward trade-off. So you got to engage in financial planning to even understand what your risk tolerance is. All right, and the other thing is you should have a self-directed IRA if you're engaged in alternative asset investing. There are the tax benefits to investing in an IRA, and using a self-directed IRA allows you to use alternative investing as a part of your retirement investing. So an IRA is a retirement account, and so you'll need to open a self-directed IRA at some point if you're engaged in alternative investing. I won't say you need to, but for these strategies that I'm mentioning, you do. So investing in real estate is also possible using self-directed IRAs. So you'll need to open a self-directed IRA account with the custodian that allows real estate investing. Our firm has those as well. You'll need to fund your IRA. You fund your account with cash, or you can roll over funds from an existing IRA or a 401k that from one of your old employers, etc. Then you got to identify a property if you're picking real estate as the investment inside your self-directed IRA. You identify the property, then next you're going to identify, it's got to be an investment property, right, that you want to purchase using your self-directed IRA funds. And you got to conduct due diligence. You'll need to make sure, basically due diligence, make sure this is the right investment for you and it's all on the up and up, and get a property inspection and do a evaluation of the potential rental income that's and the expenses associated with this property, and then purchase the property. You're gonna need to direct your custodian, the custodian of your self-directed IRA, to purchase the property inside your IRA account, and the property will be titled in the name of your IRA, not in your name. And so the IRA owns this investment property, and all the income and expenses related to the property must flow through the IRA. So this is important, and you got to follow these rules to make sure it's all kosher on the tax level. And so then you're going to have to manage the property, right? So as the owner of the property, your self-directed IRA is responsible for managing the property. Not you, really. It's the self-directed IRA, including collecting rents, paying the expenses, and making repairs. So that's when you probably need there are a lot of rules, tax rules, and related to how you can and cannot invest in real estate within your self-directed IRA. And so it's probably best to use a property manager if you're doing that, if investing in real estate within your self-directed IRA. So you got to follow those IRS rules when investing in real estate. It's important to follow to avoid penalties and taxes. Right? That's the whole point of using a self-directed IRA, is to get the tax benefit. A self-directed IRA allows for tax deferred growth, so you're not being taxed on any of the income that's coming in here until retirement. And we also have self-directed Roth IRAs. That is tax-free growth. So, but there's still rules as to when and what age you can withdraw funds, etc. So, follow the IRS rules. You cannot use the property for personal use, and there are other rules in terms of making repairs and improvements. I think you're not supposed to just go in there and do it yourself. That's not this type of investment. So, but it's a heck of a deal when you consider the tax benefits from it, right? So then we need to move on to financial planning. It's another important strategy for building black wealth is engaging in a thoughtful financial planning process. And this involves developing long-term plan for building and preserving wealth over time. And it can include strategies like investing in, it's obviously retirement accounts. You need to create a budget, building an emergency fund, and by developing a plan and sticking to it, this is really a major component and as to how black families can build financial stability and security for the future. And then one of the key components that you got to be aware of is investing in education. It's one of the best investments you can make. That's investing in yourself, and in relation to your kids and your grandkids, investing in their education is investing in yourself, but in your future generations. So investing in education is a key strategy for building black wealth. Pursuing higher education and developing the skills that are needed for high demand occupations and fields is what's important. Black individuals can increase their earning potential and build wealth over time if they do this. So, and I'll also say, in addition, investing in education for the future generations is what's going to break that cycle of poverty and provide opportunities for their economic mobility. And so, this is all these things I mentioned. I can go on and on, but I'm going to cut it there. And in conclusion, building black wealth requires a multifaceted approach that addresses the root causes of the racial wealth gap and provides strategies for overcoming them. And by exploring alternative investments, like I've been saying, it allows you to engage in financial planning and investing in the education that's going to help close this wealth gap and create a prosperous African American society. We can't always be behind the eight ball. How are we going to build wealth and improve our community? For every individual in our community, if we can improve their wealth, improve their education, and they all engage in financial planning, that's a stronger community, because each individual member within that community is stronger. So, the only way for that to occur for the next generation is for it to start here. So that's starting with you, those of you who are listening. So I'll cut it there, and I'm going to leave my contact information in the description. If you have any questions or comments, please feel free. I'll try to answer as many as I can. Thank you for listening. I hope to hear from you soon. Holler.